The autumn budget last year announced some major tax changes in the UK. This video covers the key changes to be aware of ahead of April this year and the start of the next tax year. Even before these tax changes, the average UK household will pay over £1.2 million in tax over their lifetime. So understanding what changes are coming in and how you can mitigate them is really important to be able to protect your finances. If you're new to this channel, I'm Matt. I've been a finance consultant for over 10 years. I now run my own company, and on this channel I talk all things personal finance. So the first tax change that I'm going to cover is on vehicle excise duty. This is a tax payable for every car that uses public roads in the UK. Currently electric vehicles don't have to pay this tax, but from the 1st of April 2025 there's going to be a big change, as for the first time owners of electric vehicles will also need to pay this tax. For vehicles registered after the 1st of April 2017, the standard rate of £195 per year will be payable. This will also apply to petrol and diesel vehicles as well. But the biggest impact will be on the purchase of brand new cars with high CO2 emissions. For example, if you had the money to be able to purchase a Range Rover Sport 4.4 V8, then you would have to pay an eye-watering £5,490 in tax. So if you're in the market for a new car, it's important to look at its CO2 emissions to understand its impact on the total cost of ownership for the vehicle. The second tax change is on capital gains tax. This is now payable on gains of over £3,000 from selling assets, for example cryptocurrency assets or stocks and shares that's outside an ISA. The tax-free allowance is £3,000 per year, so you can make a gain of this much before you have to pay capital gains tax. Last year the tax rates were increased. For the basic rate taxpayer it was increased from 10% to 18%, and for the higher rate and additional rate taxpayer it was increased from 20% to 24%. If you're thinking about selling assets in the short term, then it's worth considering whether to sell some of the assets that you want to dispose of prior to the 5th of April this year, so you can use your £3,000 capital gains tax-free allowance in this personal tax year, and then you could dispose of additional assets after the 6th of April to benefit from the £3,000 tax allowance in the next personal tax year. For example, if you wanted to dispose of some cryptocurrency which had increased in value and your total gain was £6,000, if you sold and realised that gain prior to the 5th of April, you would have to pay £540 if you're a basic rate taxpayer and £720 if you're a higher rate or additional rate taxpayer. Whereas if you sold and realised a gain of £3,000 prior to the 5th of April and a further £3,000 after the 6th of April, then no capital gains tax would be due, as it's within your tax allowance for each personal tax year. The third tax change is on stamp duty. The thresholds for paying tax on property purchases are about to change. If you're a first-time buyer before the 1st of April, the property value can be up to £425,000 before you start paying tax. And if you're an existing homeowner moving home, the property value can be up to £250,000. However, the nil rate tax band is reducing to £300,000 for first-time buyers and to £125,000 for everyone else. That means for a £400,000 property, a first-time buyer would pay £0 in stamp duty before the end of March 2025 and £5,000 from the 1st of April. And home movers would go from paying £7,500 to £10,000 based on the new tax rules. So it's quite a significant impact to the savings needed for both home movers and first-time buyers. The fourth tax change is for furnished holiday lettings. In April of this year, the UK government will be reducing lots of the beneficial tax advantages that short-term lettings currently receive. So that applies to Airbnbs. Higher or additional rate taxpayers are going to be impacted the most by these changes. At the moment you can deduct your full mortgage interest from your rental income, but this is going to be restricted from April 2025 to a 20% tax credit. This therefore doesn't have an impact on basic rate taxpayers who pay 20% tax anyway, but it will have an impact on higher or additional rate taxpayers who pay 40% or 45% in income tax. For example, for someone who is a higher rate taxpayer and receives £22,000 in rental income from an Airbnb property, if the mortgage interest is £5,000, before April the taxable income would be £17,000. so that's a tax bill of £6,800 at a 40% income tax rate. Now with the changes, you can no longer deduct the £5,000 mortgage interest in full. You have to pay tax at 40% on the £22,000 rental income, which equals £8,800, and then you receive a 20% tax credit on the £5,000 mortgage interest, which in this example equals £1,000 as a tax credit. So the effective tax liability is £7,800. That's £1,000 more than before this tax change comes into effect. The fifth and final tax change that I'm going to cover in this video is applying VAT on private school fees. The UK government removed the VAT exemption on private school fees, and from the 1st of January 2025, private schools have been required to charge VAT on their fees. There are some things which might be exempt, such as school meals, but for the bulk of the fees like education and boarding costs, VAT will be applied. So that wraps up 5 key tax changes to be aware of this year and ahead of the new personal tax year starting in April. I know personally tax increases is not a nice topic, but it's important to understand it so you can try and mitigate the tax increases as much as possible. If you found the video useful, please do subscribe to my channel, give the video a like, and I'll see you on the next video.